Hi, this is Lara at Elliott Wave Gold with your end of the week analysis for the trading week ending Friday 2nd of September. I said the other day happy spring everyone, but I forgot that most of you are actually in the northern hemisphere, so happy autumn I guess, although I do think spring is better, isn't it? Lookouts for surprises now to the upside. We got upward movement, which is what we'd expected for Friday. Short term for Monday, I'm looking out for a little bit more upward movement to a short term target at 1328. About there, I'm expecting a turn and a downward correction to remain above 1302.93. The main Elliott wave count expects that'll be a small counter trend correction, offering a good opportunity to join the trend, and when it's done, upward movement should resume. The target for a third wave for the Elliott wave count to end is at 1585, and classic technical analysis at the end of this week is quite bullish as well, supporting the Elliott wave count quite nicely. To see how this Elliott wave count fits into the bigger picture, every day I'm linking back to weekly charts. Both of my wave counts at the daily chart level see a primary degree second wave correction over here and a primary degree third wave beginning here. This main wave count will expect that the third wave will be longer than the first wave. That's the most common scenario, so it has the highest probability. Primary 3 may only subdivide as an impulse. We have intermediate wave 1, intermediate wave 2 now complete. Intermediate wave 3 will reach 1.618, the length of intermediate wave 1 at 1585. I still have two hourly wave counts though. The first one expects as labelled that intermediate 2 is over here. And the alternate looks at the possibility that minute wave 4 is still continuing, and then we'll have minute wave 5 down to new lows before intermediate 2 is over. And that alternate illustrates the risk today at the end of the week to any long positions. It does still remain possible that we could get one more low before we have the trend change. If minute 4 does continue, then it may not move into minute wave 1 price territory above 1330.01. And that's why that price point still remains very important for confirmation of the main wave count. It'll tell us when it's breached that it's very likely that intermediate wave 2 is indeed over. If intermediate 2 does continue further, it should find very strong support at the lower edge of this maroon base channel, which I've copied over from weekly charts. It can't move beyond the start of 1, below 1200.07, but really we don't have to calculate risk that far away to long positions. Risk should be calculated a little way below the lower edge of the base channel. Draw base channel from the start of primary 1, which is the low for gold back in December 2015 at 1046, to this swing low down here, and extend the lower edge on out on a daily chart on a semi-log scale. Draw that one really carefully. If we do see more downward movement, look out for it to end if and when price comes to touch this trend line. Let's look at the first hourly chart. Both of them see minute wave 3 over here, this point down here. Minute wave 4 may have been over here, and here might be minute wave 5 ending with overshoots of the pink channel. This could be the start of the first wave up within intermediate wave 3. Intermediate wave 3 may only subdivide as an impulse. The first wave within it for minor wave 1 should last a few days, so I don't think it's close to completion. I think this is just the end coming up of minute wave 1 within minor wave 1. At 1328, minuet wave 5 will reach equality in length with minuet 1. Minuet wave 3 here is close to 1.618, the length of minuet 1, the most common ratio for a third wave, and we have nice alternation between this zigzag for a fourth wave and this expanded flat correction for a second wave. When the fifth wave up is complete, and it could be complete as soon as we get a new high above the end of 3 and a truncation is avoided. As soon as that's done, look out for a trend change and a short-term pullback. Minute wave 2, when it arrives, may not move beyond the start of 1, below 1302.93. When it looks like we've got some downward movement unfolding for that correction, then draw a Fibonacci retracement along the length of minute wave 1. Use the 0.382 and 0.618 Fibonacci ratios as targets for minute wave 2 to end, favouring the 0.618 Fibonacci ratio. Now if this target for minuet wave 5 is reached, that means that the 5 wave impulse up for minute wave 1 may end before the confidence point is passed. If that happens, both hourly wave counts will remain valid. Both of them will expect downward movement, but the alternate will expect this invalidation point to be passed, whereas this main wave count will expect it to reach only to the 0.618 Fibonacci ratio. So how low the next correction goes should tell us which wave count is correct if they both remain valid at that stage. Now a word about this arrow on this chart. I'm somewhat bemused why, but sometimes I get these questions or comments about the arrows I put in my charts. This is a general indication of the direction I am expecting for the trend. This is not what I expect price to do, and very obviously I'm not placing my labels exactly at the price points I expect to be reached. 1585 is well above this chart. If I were to do that and pull the whole thing down, it would squish the candlesticks to the bottom of the chart. Do not expect price to move in a straight line despite this straight arrow. Markets don't do that. They have corrections along the way. So you have to actually read the text that I'm writing to see how I'm expecting price to behave and when I expect those corrections to turn up and how deep I'm expecting they're going to be. You can't just look at the chart and see I'm expecting a straight line movement, because that's just not how markets work. Okay, let's look at the alternate. It's the same to this point here, and now we're looking at the possibility that minute wave 4 is not over, because so far it remains below minute 1 price territory, which has its low at 1330.01, and so this alternate does still remain viable. In my last analysis, I had labelled minute wave 4 completing possibly as a running contracting triangle, but that was invalidated as soon as we saw a new high above this point here at 1315. That's the problem with triangles. You can expect they're unfolding only to see them invalidated at the very last moment, and the structure turns out to be either a flat or a combination. And in the text article again I had outlined that that could be entirely possible, which is why we had another higher invalidation point, and I said if the triangle was invalidated then the fourth wave was obviously not a triangle and it would be either an expanded flat or a combination. It looks at this stage like an almost complete expanded flat correction. They subdivide 3, 3, 5, and so the 5-wave structure up for the C wave is very close to completion. The target is the same because we're using the same ratios between this third wave and this first wave to calculate a ratio for the fifth wave. Equality in length with the first wave is the most common ratio for a fifth wave. Now that would see minute wave 4 end at 1328 and not break into minute wave 1 price territory. If this target is met, both wave counts will remain valid, and then this alternate will be expecting a new 5-wave structure down to new lows to end beyond the end of 3, probably to end with an overshoot again of this pink trend line. I do not have a target for the final fifth wave down for you because I do not know where it has begun. A target calculated between minor waves A and C yields a target which I think is too low because it would involve a big overshoot of the base channel on the daily chart. So I think the target for this to end needs to be calculated at minute degree and can't be calculated at minor degree. And I cannot calculate the end for minute wave 5 until I know where it's begun. And so when we have a complete 5 up, the risk to long positions is illustrated by this alternate. It is possible still that we could still see one more low to complete intermediate wave 2 before we have that trend change. But when I look at classic technical analysis, that has a low probability. It's possible, there's always risk to these positions, but I think it's more likely that we're just going to move overall upward next week. Here is an alternate wave count at the daily chart level. It's always important to consider alternates and not get stuck on just one wave count. You have to be flexible and consider other what ifs. What if the main wave count is wrong? What if primary 3 is actually over? It's possible that it's over here and that it was shorter than primary 1, which means that primary 5 can't be longer than equality in length with primary 3, so that the core Elliott wave rule stating a third wave can't be the shortest is met. In this case, that limit is at 1477.77. Now here's another important reason why alternates should always be considered. What this alternate tells us is if the main wave count is right, and this alternate too expects upward movement, then if we do get a new high above 1477.77, this alternate would be invalid, and that would tell us that the upward movement can't be the fifth wave, and it must be a third wave of a third wave. And right at that point we would know to expect intermediate wave 3, a third wave of a third wave, to end with a very swift, sharp and strong blow off top. That's so typical of commodities and gold. I'd expect primary wave 5 to end with a blow off top. It must be shorter than 3, but it can still end with a blow off top and be shorter than 3. But if the main wave count's right, I'd expect that blow off top to be particularly strong indeed, because that tendency very, very commonly, almost always, turns up for gold's third waves. This wave count expects also overall upward movement, and the short-term picture for the hourly chart will be the same. We could have a main and an alternate in the same way for this alternate as we do for the main wave count. If we do see more downward movement and primary 4 might not be over, then it can't move into primary 1 price territory below 1282.68. Okay, let's look at some classic technical analysis. We've got this weekly candlestick now complete. The colour is green. The bulls dominated over the bears. Although the bears were quite active, they managed to push price down this week to an important new low, slightly below this low. But this support line is holding. Price so far has bounced up quite strongly away from that support line and has closed above the open for the week. So the bulls rallied very strongly and were able to push price quite a lot higher above the open, creating this long lower wick on the weekly candlestick. This lower wick is bullish. It has not come with an increase in volume above the prior downward week though, but then we need to look inside this week because it's mixed. We've got downward days, a strong new low. We've got upward days, a strong end to the week. So we need to look inside this week and not just judge it from this weekly candlestick volume here. On balance, volume is giving us an important bullish signal at the weekly chart level this week. Last week it had come down to the yellow support line, which I said was probably going to help to halt the fall in price, and now on balance volume has moved up and away from that yellow support line, reinforcing the strength of this line and giving us another bullish signal. And so that supports the Elliott wave count. RSI is not extreme, so there's plenty of room for price to rise or fall, and at the end of the week it exhibits no divergence with price to indicate weakness either way. At the daily chart level, looking inside this week to see what is happening for volume, here are our 5 daily candlesticks, and if we count up the volume for the upward days, it's stronger than downwards days. And really importantly, Thursday and Friday, Thursday we saw a slight increase in volume, and Friday we saw a good increase in volume for a strong upward day, a strong long lower wick, a reasonable upper wick too though to close the end of the day, and a reasonable sized real body, not a spinning top, but the lower wick, longer than the upper wick, slightly bullish. The colour green, definitely bullish, coming with an increase in volume. The rise in price is supported by volume. That supports the Elliott wave count. It certainly does look like, as we had expected, price has bounced up from support. These lines about 1310 to 1305. I figure out where to put these by looking left. I've looked further left, off to the left of the chart. We've got resistance here at 1305 and support pretty close these 3 times to 1310. So that's how I figured out those. RSI at the end of the week at the daily chart level is closing in on neutral, plenty of room for price to rise or fall, no divergence between price and RSI to indicate weakness either way. On balance, volume came up from this yellow line at the daily chart level, giving us a bullish signal. It's come up to touch the purple resistance line at the end of the week. Now, a couple of things could happen here on Monday. Now this line may offer some resistance and halt the rise in price, and so overall we could get downward movement for Monday, which is what the hourly Elliott wave count is expecting for a second wave correction. That could move on balance volume down and away from the purple line as it finds resistance again. If that happens, that would be a bearish signal. Or we could get another upward day for Monday, and on balance volume could move above the purple line. If that happens, that would be a strong bullish signal from on balance volume. If on balance volume moves down and away from the purple line, then the yellow line should offer strong support and halt the further fall in price. That may stop price from being able to move down below support. If on balance volume does that, then on the next test I would expect it to break through. If on balance volume breaks through this purple line on Monday, then that purple line would then offer support and make any following corrections in price more shallow possibly than they may otherwise be. So there's a couple of ways to read this. We'll see how it behaves on Monday, but for now we've got a bullish signal here from on balance volume. ADX is still declining, telling us the market's not trending. The positive and the negative DX lines still whipsawing about each other, typical of a not trending market. ATR also still overall declining, increasing for Friday, but one day of increase is not enough to tell us it's changed. These two indicators are still in agreement. This market is not trending, it is still range-bound. During this range-bound period, which began here on the 8th of July after this upward swing ended on the 7th of July, it's two upward days during the sideways movement, this day of 8th of July and this day of 23rd of August, which have strongest volume. This trick almost always works well for gold. It tells us that gold is most likely to break out of this range upward than downward. That's what the Elliott wave count expects. That supports the Elliott wave count. Stochastics reached oversold and we saw some divergence that told us to expect the upward movement we got for Friday. I'll expect now stochastics to return from oversold and continue up to overbought, for price also to continue up to find resistance. How price behaves and stochastics behaves when we get to resistance is going to tell us if we're going to finally break out of this range or not. Bollinger Bands still, we saw some increase or some widening during this week, but overall still reasonably tightly contracted. Volatility will return to this market, the Bollinger Bands will widen again, and it's most likely we're going to get the next trend upward. The Bollinger Bands don't tell us anything about trend direction, they just tell us about volatility. That's all for me at the end of the trading week with your technical and Elliott wave analysis, and I hope that all of our members are looking forward to a most fabulous and relaxing weekend.